Hello, it's Sunday the 10th of October, and this is the Stage Analysis Members Weekend video. So I'm going to start today's video talking about the blog post I did this weekend, which was on Open. So I posted this on the Stage Analysis website over the weekend. I went through the weekly, daily, and the point and figure chart of Open, and a brief look at the fundamentals as well. So we'll cover that at the start of the video, and then after that we'll be moving on to the regular weekend content of the going through the major indexes, the market breadth indicators, looking at some of the other stage two, looking at some of the stage two breakouts and continuation breakouts from this week for the longer term traders, and then going through the weekend watch list and some cryptos as well. Have a look at Bitcoin, had a potential stage two breakout last week as well, and with the crypto coins, percentage of coins above their various moving averages is in a interesting position as well. So we'll look at some of the crypto breadth as well at the end of the video. So yeah, coming back to the start here, we've got we're going to start by talking about OPEN, which is Opendoor Technologies. So as I said, did a blog post on this yesterday. So I'm just going to run through this and go into it in a little bit more detail. So starting with the weekly chart here, we've got it's potentially at the moment in stage one. So this is what we call the primary stage one base following the IPO base. So you can obviously argue that it's already been through the various stages, but I prefer to label up the initial part from an IPO with the life cycle trade terminology. So where you get the IPO AP, which is the IPO advanced phase, the institutional due diligence phase, and then it moves off into the institutional advanced phase once it breaks out from its initial base. So, and there's various other labeling as well. But so with stage analysis, with the stage analysis member service, I do a mix of Stan Weinstein's method and Wyckoff, and also a bit of Minervini and Canslim as well. So sort of a blended style from obviously my own experiences of using the different methods. But it's primarily stage analysis with Wyckoff, and then a bit of Minervini thrown in really. So again, looking back at this, we had an initial IPO advance phase, which was the initial stage two advance. It formed a buying climax back in earlier in this year in late January, February time there. So where's the weekly? So you can see in February, early February there, we had the buying climax. Then we had this change of behavior, which put it into potential sort of stage three hype top, but it was a sharp move with the change of behavior, as you often get with the IPO type stocks. So we had a very brief stage three, and then it started moving back down into a stage four decline here, but it didn't make much progress in that, and found support around the top of the IPO base. We had a local selling climax, and then it's been basing ever since that selling climax in May. So we've had a good 5 or 6 months of going sideways now, and it's starting to develop with the 10-week moving average starting to move back above the declining 30-week moving average still. The price action has been moving higher from the base since the start of August here. So see, we had this change of behavior week here, which if we go down onto the daily chart, you can see there was a gap up week here on heavy volume. So this was our first significant bar, and the change of behavior following the sell-off from the highs. So we've been developing this stage one base. Obviously, if you go through in Wyckoff characteristics here, you've got a selling climax. We had an automatic rally, some secondary tests. Then we went into phase B with some testing. Then this change of behavior here, and then pullback. So we potentially moved into phase C around this area, or potentially over here with a LPS. So it's either phase C, potentially either around here or around here. So either or, it doesn't matter too much at the moment. We're still in a developing stage one base, and we've potentially got a sign of strength rally underway from the lows down in July, August sort of time. managed on Friday to get back above this 200-day moving average. So it's starting to progress in its stage one base. If we go back to the weekly chart here, you can see I've marked it up with two ranges, as there was a few swing highs up at this point here back in March and April. So the initial range that formed failed. We had an initial selling climax, an automatic rally, and then it pulled down and we had a sign of weakness and it carried on down. So we actually forming a lower base, but we've still got resistance from this broader base up here. So we're in what's known as the institutional due diligence phase, where institutions are weighing up the stock and starting to decide whether they want to start getting into it. So at the moment, it looks like it's an accumulation base, so hence why it's marked up as stage one. You can see the relative strength versus the S&P 500 has been improving, and we're below the still flat zero line. So the zero line is the 52-week relative strength moving average. So this blue line here, you can see where the relative strength has been improving since August, and it's getting closer to that now. So once it gets back above that line there, that would then signal that it's outperforming. And generally for when you move into stage two, so if we break out above these near-term levels here, so the top here, so 22.79, 22.65, so around 23 level, if we chop around in here for a little bit and then move out or immediately move out, we could potentially move into stage two, as the 30-week moving average would then start to turn up as well. We're already above the 10-week moving average there. We'd be looking for on the stage two breakout. What we look for is a strong volume, more than 2 times the weekly average. So we'd be looking for, if it was immediately on the next week, you'd be looking for a bar, something like that, and a strong breakout move there. But ideally, we'll see it consolidate within stage one for a little bit longer first, as it's already moved quite far in the near term here. We've come up about 60% from the low at the moment. If we go back to the daily chart here, so the base that's been forming in this stage one range here has been going on for, we've got 5 months there since the selling climax in May, but it did start basing back in March as well. So if we go to the point and figure chart on this, you can see that's the March low. So 3, that was the March low down there. And then 5 is May. So the May low was down here. So this is our selling climax down here. So we go back to there, just click that. So May, yeah, that's the selling climax. You can see the selling climax is down here. So if we use the Wyckoff method, point and figure horizontal counting method, in order to generate targets, so you can gauge the cause from this base and how much energy it's built up during the basing process and how much potential it's got to move. So at the moment, from the smaller base down here, from the count line was 17. We're using a 0.5 box size with a free reversal, so that gives you 25.5 projection on top of these two areas here. So your LPS at 19 and your base low at 13.5. So it projects up to 39 and 44.5, which is around 80%, I believe, top of my head. Also, maths might not be brilliant there, but it's a decent sized cause there. So there's plenty of room for that to run from the current level if it does move out from the base. If we look at the fundamentals on this, you can see earnings per share last year were obviously negative, but this year they're expected to be better, and then out to 2023 they're expected to improve. They're still expected to be negative, as you can see from the revenue, which is another area that I focus on when I'm looking for stocks potentially moving into stage two. I look for strong revenue growth projected out through the years. So last year was down, I think it was around 2 billion-ish down there. So you can see over 20 billion there. Yeah, 2.58 billion was the revenue last year. So we've got potentially 8 or 9 times by 2025 on last year's. So that is really, really strong revenue growth expected from the various analysts that cover the stock at the moment. So that's what I'm looking for in open. So we're waiting for a potential stage two breakout. Obviously, in the current area that it's in at the moment, for those that use the Wyckoff method, it's moved. If it's in phase C or potentially moving into phase D, then there's early entry points within phase C and D that you can use in the stage 1 base, which I like to use myself. So when you're coming off of a spring, the follow through move, so this area in here, other follow throughs in here, so and on tight action on any pullbacks where there's low risk, and you can manage to get a stop loss position with decent risk reward. So there's plenty of early entry points in the kind of zone we're in at the moment, but I'm looking for personally for this to start consolidating in the upper range above this lower base here. So hopefully we can get some backing up action within this sort of upper range of the lower base, and then for a potential stage 2 breakout move on strong relative volume. So that is open. Okay, that's the for anybody watching this on YouTube, that's the end of the free content. But for stage analysis members, we're going to now carry on into the next part of the video.